All right. All right. So welcome to our weekly market update. As you all know, this is Plan B Express, and what we do here is to explore the global financial market, especially when it has to do with the market, the stock market, the forex market, and taking advantage of them. Now, I will pass one message. If you are joining us for the first time, if you are the first time joining us for the first time, you are welcome tonight. And stay put. Don't go anywhere. This is not Ponzi scheme. This is reality to be involved in the market and take advantage of the market and as simple as possible. Now, so number one is this. I was talking about last week, and those of you who are on our platform on ecosystem PBS club. So as you all know, many persons actually have written off when it has to do with crypto. Quite unfortunate. Many people have written off. Quickly, I'll do one something. I was telling us last week that going to be buying Nvidia as a stock. So I just want to start this briefly on this today. So I was talking about still buying Nvidia as a stock. And those of you who, if you miss our Monday, our money period, because our money period now have been matched two, as it were, because we discovered that that money period, if you miss the live, you can watch it on YouTube. That's the mathematical equation from 8 a.m. to 9 a.m. Nigerian local time, GMT +1. And there I was talking about Nvidia and then some sectors of the market in stock, both foreign stock that I'm going to move, like talk about security, talk about AI, and one other sector I talked about, and some stock is actually moving towards the direction. And that's one of the advantage you have. I have Nvidia since I didn't sell, I just leave it, just doing what it's doing and all of that. So then the quick thing I want to show is that the stock market, I told some persons when I talk about investment, can see that Nvidia, Google, there are people are still buying, crazy more buy, strong buy continually, right? Now, but this week we may a little bit be careful, especially if you see the move of Nvidia last week, that we may to be some kind very careful about the stock market this week, but it's still going to very, very phenomenal as much as possible. So then our local stock too, I told many persons they probably do not understand, right? They probably do not understand what it is to participate in the local stock. And we'll talk about wow. So MTN is back to 825 naira per share. So that means last week it did about 9%. That's crazy. I never knew. I think we're going to be about to be paid on our, so you can see more strong buy on, and last week it was 760 naira per shares and all of that. Now, if you have been following us in our ecosystem, this is a stock I gave out when it was 160, 170. As I talk about it, 200 naira per shares. Some people, when they were buying at 400 naira, I remember somebody told me, sir, it's better late than never. I would just buy it at 400 because I knew when you were telling us less than 200. But rather than wasting my time and say, let me wait for it to come back, let me just buy at 400 naira. I remember that was last year, or was, I can't remember. And then now, so that means the fellow have doubled his money. And now, of course, last year, in January this year, we have received a dividend from MTN already. And we're still expecting some dividend, I think this month or next month, month of May. Now, so you can see some of those stocks did massive activities. Why are they not declaring this percentage and all of that? Now, Boa Cement, the same thing. My first Boa Cement was 67 naira per shares and all of that. I think saw Better Glass, and which other stock was that? Was taking some movement. That's Lafarge. Okay. Yeah, so look at Better Glass. Yeah. So now I'm not going to detail about that. So let's quickly go into the market as it were. So now that's for stock and crypto. And I tell a lot of friends when they talk about crypto. So there was this crypto last week. I was telling you guys about a particular crypto last week. It did very massively well. Now, so if you don't take the profit on the table, you definitely will regret that crypto. That crypto moved from less than $1. That's about 40 something cent or 50 cent. And then within 2 weeks, it moved up to 27 naira or more. And as I talk to you now, that same stock, that same shares, sorry, not shares, I'm sure it's going to be part of the worst performing crypto right now. Even Syrian, I told you guys about Syrian. I bought Syrian, I took it, I trade on it, and all of that. And then when it moved down. So now quickly, let's go to the market and look at what are we looking at for this week in this market. Now, I've told you this market, if I tell you more thing about talking about the market, the influence of the activities of the market right now, like I've just said, trading is not easy. Trading is simple, but it's not easy. Now, so if trading is not, if it's simple but not easy, uh, what are we now talking about? Why do I need to trade? Now, I said trading is an asset that combines three elements. One is the mindset, and number two is the skill set, and number three is the tool set. And that's why we have a scanner. So by quickly, let's look at it, the market. So the determinant for the currency market is this Mr. Man called the DXY. So the DXY had been rock pulling, right? So I've been pressing down in the markets for the past how many days? And that's why you saw some movement on Euro USD jumping up and all the like. Now we're in a very tiny support. So that means potential still going down is high for DXY. Yeah, so you can see this is a whole day candles, very confusing. Even though we have a sweep, so probably if we return back here, that means we're still going to have more press down on Euro USD. So, but you have to be careful. After the press down on Euro USD, then you can have a bounce because if this market is going to be rejecting here, this week, so that means we're going to continue because these are weak support. The resistance are stronger. And if you are using that scanner, so I just have to go straight forward today on about, to make job easier for us. Now, so the thicker the resistance reflection, the stronger the level. And so that means potentially you're looking some rejections over here. And then that means if that's going to be issue, the first thing you look at, I've told you, Euro USD is US dollar or DSY upside down. So you see that Euro USD is going to sell. So that means you can have some good sell. No, not a good sell per se, but let me see. If you look at where the support is stronger. And so if market is going to open this week and we have a pullback and a rejection from here, so that means you could do about 120 or 100 pips. You could target 100 pips on Euro USD. I'm not going to detail about that. I'm just going to do example for you how you go about that this week. So whatever happened to Euro USD, now should expect similar thing to GBP USD. Okay, though they may move in their different pace, but of course the same direction. So I always advise people, newcomers or beginners trading forex, to trade more of major pairs, especially correlated to US dollars, and that's going to help you so much. Okay, reduce unnecessary stress. Yeah, USD Euro JPY we sold last week. Now a massive sell last week, and so for this week now, if all things going to be equal, so that means you're looking at the Euro JPY to see come down. But let's not go to those far pairs, because you can have some more activities on. You have Euro USD, you have USD JPY, you have GBP USD, and all of that. That's going to give you much money, and so you will have to want to focus more on that. So that USD JPY, you have to be very careful. But those of you who are using scanner, I told you guys last week, I sold like this, I bought like this. I think I sold again and I bought. I think I was doing training about that. Now, if you look at it, so that means DXY coming up, that means the USD JPY, you still have more continuous selling. So when the candle first open, what you want is just a pullback. So if you look at this one now, okay, let's look at daily candle. So you can see how volatile it was last week. So you can see we have more resistance over here. But nevertheless, people are making a lot of money. So if that's the case, so if I look at something like this, that's potentially looking at market, USD JPY. So perhaps maybe targeting within this range to find a sell positions after the move up here, probably here. So that means targeting about 159.05 or thereabout before you have a sell. And if you sell, you could still stop here. But if you're able to break this beautifully, then that's going to be a massive sell for USDJPY. But you know, it has been doing this nonsense for quite a number of time here. So, but you still have a stage, a kind of rejection, or even return back to this origin before selling down. And just like I've told you, whatever DXY do, all right, so because DXY is slang back up here, now we make USDJPY to move up to and make Euro USD to go down first, then before having a bounce, like I've said earlier. Now, one of the lovely thing again now, so going to our gold, very simple. Now, gold last week, you can see for over how many times it has been a very nice support and then continue to rally up. But there's something quickly you probably want to look at here as a smart money activities is just like a fair value gap here. So tapping into reserve rally and like an inducement or liquidity here and then getting up, but you know, not getting into the at least maybe 50% of it. So maybe we could have gold come up and then rally up to a bit. So if you didn't mitigate this candle, then that means we'll continue to have some sell. Now, one of the lovely things about gold is that it has a lot of volume and many people are making a mistake about it. Now, if I step down to 4 hours on gold, and then you see that gold actually sold last week. Yeah, after the pump, there was a sell. So if you do not have this scanner, you may not see it. So you'll be dilly-dallying. But if you settle down properly, you will see that this point and this point, not even with your scanner, right? So if you take off this scanner, let's look at it this way quickly. Let's go this way. So if I take off this one, let's take off the zone. So if I take off the zone, for instance, so you see that you have something similar to, let's go this way. You'll see that you have something like this here and something like this here. So making it to be like a double top and a sweep of this double top, then gold should sell down. Now, but the sell was not too smooth as per the market was more kind of reacting to some of those fundamental of potential ceasefire, not ceasefire, all of those things. And then that was what happened. Even Bitcoin, you can have a buy on Bitcoin. So now, if you look at it on gold, so quickly let's look at because many of us are interested on gold as much as possible. Now, if you look at it on gold, you see that we're having a rejection, not a strong point as it were. So, but that last week we have this. So, give and take, we have a kind of buy rejection, or yeah, buy sell rejection. Then you have gold sell down, to this region of 465. So that means you should be looking for more sell. That is if we have a buy rejection as market open. So I may not have time to do more detail about it, but I'll do one example for everybody to understand. Now, for those of you, I remember last week, I told those of you on our platforms on the PBS Club, we traded this stock, we bought it sometime, and I told you it was going to be buying back, and I bought back at $14, and I mentioned it that last 2 weeks or something. When at the end of the month, that was like, so it was ranging here. And I think that means for anyone who probably was able to follow and buy, that will have done about 20 something percent. That's a massive one. And this is a foreign stock. You can buy it on Bamboo and then other app that we use to buy both local and foreign stock. So you can see the potential of where it's going to be returning back to about 25. And we're able to break that maybe before the end of the month. And so that's going to give a massive profit, more than 50, 70% from the bottom buy, if anyone who actually bought. Okay, so now quickly look at it. For instance, either of any instrument you are looking at okay, so now I'm going to Bitcoin, talk about Bitcoin. So let's quickly look at Bitcoin. Now, one of the issues about Bitcoin right now is the fact that Bitcoin was push up, all right, last week, massive push up. Let's look at it. So that means after the push up, then we have a kind of nice sell, right, on it last week. So if that's the case, what are we looking at? So we have a sell now, and then we have a close. That means potentially, so Bitcoin is looking for more of sell. So, but what am I going to do? So let's look at it. If Bitcoin is going to sell this week, also, okay, today has not even closed. Bitcoin has its own dimension. If I look at it, at what point should I look for Bitcoin? Probably if it's going to sell, So if I take off this one, okay. So let's go. Let me go to 1 hour time frame. So that means if we're going to have some level of rejection on Bitcoin over here, then you are going to be selling. So that means you can have selling opportunity. So after rallying up for Bitcoin, and that had been selling since last week. I think when we were in the training, I was showing some people on 5 minute time frame that was going to pull back to a range, and then that's a very good sell to the. So if you have Bitcoin returning back to 75,500 or even back to 75,800 or 75,900, from there we'll have a rejection, then that's going to be a very good sell. So that means you should be looking for more or sell on Bitcoin, but depending on how today closes for us to open the new week, perhaps. All right. So where we saw that much more sell that last week from up here, that was a very nice one. We saw a temporary buy. I think in that training yesterday in our conference trade, I was telling some person I was just like a pullback. It's not going to be, and that's after that pullback. I think it was around what time are we that yesterday? Okay. Yeah, so that was somewhere here. I cannot remember. And then it now decided to sell more. So that means you are looking for more sell on Bitcoin. So if you're going to see more sell on Bitcoin, so that means you're going to be looking at Bitcoin probably coming down to $72,000 or thereabout, or even, yeah, something like that. Okay. Now, so like I said, why you need to be very careful about the markets, those of us who buy and sell some Bitcoin or cryptocurrencies or other crypto as it were, is that you should be able to look at what am I actually looking for? Because this coin was, I was saying, after pumping to about $27 or thereabout. So look at the rock pull, staircase, then pull down. Well, it actually got to almost $29. I only monitored to $27 and look at it. After that, bang and fall to the floor. What are the chances that's going to have momentum to bounce up? If something moved from $28 back to $1.2 or $1 as it were. So what is the chances, all right, of this immediate rise? It's very narrow, especially when some coins actually come to some breeding. Ave had problem because of the attack on their liquidity kind of a thing. And that's why you have this massive crash. That was a very crazy crash for some people who are trading futures, and then it came down so as much as possible. I'm sorry, I'm doing all of this just to give you an aha effect. We're looking for, first of all, a sell, right, on Euro USD, right? I think we say so. Now, this is, no, what is that other one I actually brought here? Okay, Syrian. Okay, Syrian. All right, Syrian. So Syrian was a massive move too, and look at the crash. No much English. And now not many persons will do what is necessary when the market was moving. So let me quickly do a little demonstrations of the market and how you actually buy or sell the market, especially if you are new. Tonight, let me just share with you quickly. Now, number one rule is that while you are trading, it's very simple. It's very important. You should understand what you are doing. Okay. Now, so this market is simple. If you're a day trader, very, very simple. Okay. So let me just quickly hide every form of now, either you know how to trade or you do not know how to trade. So, but I want to pretend that you do not know how to trade. Now, so if you look at trade, as it were, it requires a lot. You have to be very mechanical. And now the mechanical way of trading, I'm sure many persons will hear about top-down analysis, and all of that. And this top-down analysis, most time you want to start from daily time frame. And now if you are going to be looking at daily time frame, that's going to take a long place that you want to look at. Now, so that means if you want to look at daily time frame, first thing is that you want to look at what's the trend like. So you want to say, okay, overall very big trend of this market is an uptrend, right? So this is the highest, and this is a low, okay? So this is a high, this is a low. Here's supposed to be a low, okay? Now, but this is like an inducement, and that was why this one came to sweep it. Now, but this is a point. So recent break, so that means this is a high, and then this is a low, okay? Now, if you look at this low, perhaps this low, some has actually broken it. Yes, this point has broken it. So as it were now, so that means you have a high, a low, and a high, and a low. So we have a lower low, a low that's lower than this low. This is a low. On a daily time frame, look at it. We have already a break of structure to the down. So if this is a break of structure, so that means this was a high, this was a high, and then this is a lower high. So if you have here there on a daily time frame, so what I'm supposed to be having is that the market, as it were, has to take from here to this down here. Just a moment, guys. Okay, so this is what we call top-down analysis. But not everybody will have this time, and not everybody will have this understanding. It's actually not what I call it. It's actually complex, but not difficult. All right, it's actually complex but not difficult. But for me to take all this time to start doing this analysis is difficult, right? Because it's not easy. You are going to be struggling over and again. So, but this is the broader perspective of this market. I need to look at it in a structural way. So if I look at it in a structural way, but no matter what structural thing you design most time, now things change fundamentally and it can affect the whole market. So ordinarily, that means if I'm looking at this market now, it has actually shifted the market, the structure shift of the market. So that means ordinarily what I should be looking for go to sell from are actually from here. So the whole entire point here is actually my area of focus. And this is my area of focus. Then there will be point of interest that's supposed to be looking at, which are these, okay? And these other. So this entire order flow to this point is very important. And then it comes to actually my premium region. And I want to be looking for sell for premium region. Now, I can use daily because gold has a very fantastic and big volume. So now, if that's the case, internally, I step down to 4 hours. This top-down analysis is very simple. But the challenge is this: while you are doing this, time is going, and then sometimes the market can range in one place, as simple as possible. So now it's not bad, it's not a bad deal. Now, internally, I'm having 4-hour structure. A low here, a high here, a low here, a high here, a low here, a high here, a low here, a high here. So if I have any high, this is like equal high. So this is like a total break and sweep of this liquidity for me. So if that's the case, so what am I supposed to do? Internally, you are looking at, okay, this market has taken and touched to this point because you still have a repeated fair value gap here. It has tapped into it. So if you tap into it, where is the recent low? So that means you are going to return down. But on daily time frame, you already know that this market was already touching into an area of focus, and because this is the region where you are. So here we come down to 1 hour time frame. And then, so what am I having? On 1 hour time frame, I'm going to deal with immediate structure. So this is the structure high, low. This is a high, okay? Yeah, so this is a low. So this is an internal, which is like an inducement, an engineer liquidity getting swept, and then we have this. Are we able to break over this point? Yes. So this actually got broken. And then, so that means if we get broken, this is still the low. Okay, so if that's the case, so what should I do? Give and take. I don't want the market to break below this. I just want the market to come down to anywhere, probably take out this liquidity, and then probably find a region. So what region am I going to find here? So let's just go quickly. Now I'm just trying to just narrow down. But before you do all of this, it can be very bothersome, very, very bothersome. So here I come and I look at, okay, this market, this entire point here, this was a sweep, and then this is a low, the main low, and this is internal, and then this is a sweep. So here I come, and then I'm going to navigate if the market was going to continue to buy. So that means I'm taking all over to this point. Okay, all of these are an inducement. So if I'm going to return back here, I already have a point that was partially mitigated. So that means I'm going to take this from the order flow. This was it tap into? Actually, no. Okay, so that means I'm still within the area of focus. Okay, so this market to return back, sweep this liquidity for me to buy. You can see now. So internally, you are now having a different direction entirely, but overall, that this market has actually internal structure, all right, moving. That the same thing what you have in 1 hour is always what is repeated in 30 minutes. Just understand that. Now, so if you look at it, you have another different internal structure after here. You have a different internal structure here, and this low, this high, this low, and then the market zoom up. So that means looking at this market on this your internal structure on 15-minute time frame, that okay, this market actually broke a structure here. Then you have a fair value gap here. So down to this point, that's another block. So are we going to travel down to this point? This is another block for me on 15 minutes. So you can see all of these points are very important for me and you when the market come down there. And gold is a very stupid guy. It does respect all of those regions as much as possible. Now, 5 minutes is not ideal for me to actually go to, except for me to want to navigate to. So that means I have so many points I'm waiting for. Yeah, this is a very nice rejection, but as rejected, so the best field for me is either the market actually I root down to this point and bounce and I buy, or I wait entirely. I think where do I mark here? Here, this other block down here, and I buy or break above this below this point, reject again. So that means market is changing. Now, where is now the scanner helping you? Look at it. Now, the scanner will have helped you enough when you're seeing all of this. I will have bought in or sold at the market moving down to this point. All right. So when the market, so let me take off all of this background that, sorry about that. Okay, so let's take off this. There's no more English I need to speak if you have the scanner ordinarily. So you just get yourself fed with whatever the scanner is giving to you. Okay, so let's take this. Good. So working with the scanner now, some people have sold since that last week. So, but yet, even working with the scanner, so that means this one, even on 4 hours, you still have this as a demand zone or another block, as it were, that if this market could come down to, it comes from there. So you are conscious of this. So in a nutshell, you are going to have more a sell before a buy, all right, next week. So if we're going to have a sell, sorry, you're going to have a pullback and we'll sell. So if we bounce from here, fine. If we do not, that means you can see the market. Look at where we mark ordinarily from there. That means the market is going to come down to this point. So now that's just one of the things you need to understand. For Euro USD, like I've said, very simple. You want to have the sell continuation first, which I've started since last week, Friday. All right. After I sold here, I took profit here. Many people don't. Sometimes you have to be very dynamic. When I sold here, my 1:2 risk reward already closed. It was only the one that was trailing, both USD, GBP USD. The only one that I saw, the same thing that repeated itself. The only one I know I held and I've not closed up to now was Euro JPY. All right. I have not closed it. So I only mark this as a take profit 1 and take profit 2, but I've not closed mine and it's still there because I'm looking for the market to return down to this point. And so if we're going to have the market pull back, probably have a rejection here. So that means Euro JPY, you still got to have more sell. So you can pay attention to it, just like I said last week and all of that. Okay, gentlemen and ladies, these are basic things about this market and all of that. There was a token I was to send, that was going to get some of those. Okay, so let me just go back here. One of the advantage of all of this token is that if you find a appropriate one sometime, you just buy either you don't need to so much energy that you want to buy or do what's it called? Do the sales on futures, but to actually just make sure you find the market at a good entry point and then leverage on the movement, not necessarily futures. Like that last week, that rev did over how many percent for me? From 50 cents to $27. So 50 cents to 20. So even from, okay, so even from $1 to $27, that's additional $26. So that is 26x. Am I correct? Because $1 to $2 is 100%. So that's about 26x. That's about 2,600%. That was last week. Crazy. Okay, so now let me use an example now to explain this to us. Now look at this coin. So AUD, GBP, AUD. Be careful, those of you, if your account is very small. Now to trade this one, look at this is the simplest way of trading, like I've explained. If you miss our conference yesterday, you miss a lot, especially if those of you in Port Harcourt. If you miss our conference yesterday, powered by WellTrade, and then engineered by FGX Academy and Plan B. It was crazy, right? People took trade live and they make a lot of money. And that reminds me, tomorrow is a very powerful. We're starting 3-day fast track. 3-day fast track. Why do we want to do this? Because we know that trading is simple, but human beings were very complex. If you follow, they say follow who know road. If you follow people who are going to be holding you by hand and you are taking an experiment, you are going to be good. Now, don't think that trading you can perfect it just one day. It's quite unfortunate. A lot of people want to come into the financial market, and then so for you to be a medical doctor, was it just few days? Was it 1 month? Was it 2 months? It was not 1 year. Neither was it 2 years. So it takes time for you to actually get stable in the market. Most time people just want to get, oh, I just want this one and all of that. Yes, sorry, the event was massive. Okay, so 3 days fast track training, which is 8 p.m. GMT +1, Monday, Tuesday, Wednesday, and on Thursday, physical live. Okay, so on Monday we're going to put you through. If you are listening, I know some of you probably you were there yesterday and you do not have account yet. Register, verify your account, and then so that we can put you through. You can go further. And somebody was chatting with me yesterday, no, in the midnight, that he traded and he made one had not even closed his trade. One said, send me test. In fact, I said I was going to send his testimony. And one told me that he made $300 that yesterday. Yes, $300. And I told him, I said, it's like you have registered for long. He said, no, no, no. It was yesterday he registered with us. I said, wow, that's crazy. Now, so let's look at it very simple. So that tomorrow when you wake up, this is what you should look out for. Once you wake up, any market, it doesn't matter which market, either you're using scanner or not, right? If you look at this market now, let's look at this chart. It's just that this guy is very stubborn. And why you need to be careful about anything GBP tomorrow is that I think there are some fundamental around it. Look at it. This is GBP, all of them. So you have to check so that and be careful. But on a good day, look at this market. Now, there's what we call CCT, okay? Candle continuum theory. Now, if a market was bearish, like this is, look at this, a very powerful bearish, and this is Maribozu, all right? No tail, no tail, so no wicks, no high, no low. So all of them were just full body. So now this one closes below this. Now, this is what it is. Since this candle closes like this, I'm even surprised that it didn't have very better momentum. It should have better momentum, not even the shorter candles. Now, this is an indecision, all right? This candle went bearish very massively. Now, ordinarily, you say, okay, as you take out all of this liquidity, we should have a bounce. We do not have. So now, what does it actually come to harass here? So let's say it come to harass this gentleman here entirely here. Very, very simple, right? So if you come to harass this gentleman here entirely here, okay, so ordinarily you will expect that, okay, maybe after sweeping this liquidity, this one, but this is a full groom. But the response of this candle were not too massive. So now let's quickly go. So getting to this point, this candle was bearish, but it never closed below this low. So that means the market is getting weakened. Look at this. So on a daily time frame, with this candle, this is not a breakout structure. This is a sweep of liquidity. Okay, so since it didn't close below, so it closed within the range. So that means this is the range. So we have an area of focus here. And so that means this market closed inside this box. Okay, so it closes inside that box. Okay, let's look at it. Black. Good. So it closes inside this block box. That means though weakening was not too powerful. So what I want tomorrow is very simple. So what I want tomorrow is this. So this candle, so this is the low and this is the high. So this is the close. Okay. So what you wanted is that this market tomorrow, right? This market tomorrow, two ways, is that this market should open here, come down. So it may not necessarily sweep this low. So be very careful. Sometimes we want a sweep of this low, it may not. So all what you want is that the market open tomorrow, right? If you go down and once it's able to reclaim inside this body, then you are looking for a buy. It may not be too fast, so but you're looking for a buy, as it were, because this week is too long. If you take it out, chances are there that if the market open tomorrow, right, with this line that's here, let me take off this one quickly. So if you're open tomorrow with this close, and first of all, let's go this way. So, and first of all, go inside this box and get rejected with this body, then that means we'll continue to sell in spite of this. So, but what you want to emphasize was that tomorrow the candle open, you first go down a bit. It may not sweep this. So don't expect the sweep to an extent. And then we bounce back inside this box, then have a kind of change in structure. Then we're going to continue by tomorrow. Maybe not too much, but at least maybe taking back to this point. Now, this guy has so much volume. All right, this guy has so much volume. So if you look at it going back to your 4 hours, which is your major structure, so you can see something like this. Now, if this something like this already happened, so this is the simple thing we're going to do now. So if this already happened, so what you're supposed to do, that means somebody's already in a buy since last week, because on 4 hours, this cannot tell you a buy. So I'm marking now straight down. I'm not going to go to 1 hour, just go to 15 minutes. And that would have been the buy yesterday, that last week. Look at it. This was supposed to be the buy. Now, if I refine more down, probably I want to have a sniper entry. So this is the buy there. The buy was still valid. Okay. So that means what you wanted for this. So let me go to 3 minutes, the lowest I could go in currencies. Okay. So that means what I'm looking for. Okay. So let's look at something very quickly. So what I'm looking for this week, when the market open, it should pull back somehow. If I cannot find any important area, the market should come to react to here, either somewhere like a fair value gap or something. Probably if I go to 15-minute time frame, I could find that, right? Or even returning back entirely to this order block down to the floor and then look for a buy. So the one important is that it may not necessarily sweep the low because it's far off, okay? And so that means I'm going to be sober for anyone who was in as at last week will have taken some trade already. And then even on 15 minutes, definitely the market will have been taken. So maybe we're looking at come on, let's say here, if the markets return back to the pullback, the partial fill of this FG, okay? So that the markets will come back there. Now, you can see there was a nice rejection that last week. So if we return back here and then create a setup of buy, then that person will looking for buy. So that means potentially you are looking at a buy range of 1.88334, to 1.88283 region. So if you can mark it in your trade, if that's the currency you actually trade, and just an example, then that's going to be a very nice one for you. Okay. So, ladies and gentlemen, this is very, very simple. Now, trading, currencies, trading, and all of that. So you can see Bitcoin, I said, that's not closed. It was still selling. I actually sold last week. And then when the trading, this was somewhere where I say the market was pushing back and it was just a mere pullback that's going to be selling more. It's going to be selling more. That's what it's doing right now, right? So maybe by the time you wake up, okay, so let's say by the time you wake up, you have a nice drop here, 73K, and then we'll have a bounce there. That means you should be buying. But without that, that's going to be very delicate, as it were, because you can see that the structure, direction change, and all of that. So if the economy becomes somehow funny and too many fear in the market, that means you're going to find Bitcoin landed back to $65,000 again and all of that. So you can see the earlier thing of people always take an entry, which was kind of you will have find another entry as early as possible. I think the same thing on Ethereum. All right. So Ethereum probably is like the major support zone, which is major order block here inside this support. So, right? So coming back to 2,197 or thereabout, or less than $2,000 for you to find another buy. Okay, so that's one of the things the market's all about. So we said the stock market last week, they blossom. You can see that, all of them. So, but this week we got to be careful. So, but if all things being equal, that means we'll still continue. Look at it. Massive, massive, massive recovery last week. Okay, so ladies and gentlemen, this so far this week, looking at the Forex market, currency market, and all of that. So I've said tomorrow being Monday and Tuesday and Wednesday, 8 a.m. GMT +1, we have what we call fast track course. Now, this course is not to teach you terminologies, no. We're going to be exploring the market. So what it requires for you is to make sure you have registered your account, that you are OGs and all of that on WellTrade, so that we're going to be taking trade, put you through and take trade. And then for that 3 days, we'll see how it round up. Then on Thursday, we have physical kind of trading if you're in Port Harcourt and in Tevron. I think it makes a lot of sense. Okay. So please, ladies and gentlemen, and then finally, what I'll say, you are trading. Many persons trade, they make a lot of money, but they don't have management skill. One of the cheapest ways you should help yourself doing this is that as you are trading, don't be carried away that I want to have maybe you are trading with $200 and you have traded to 1,000, 1,200. So, and then if I can push this money to 5,000, actually, you are wasting your time. If you have pushed that $200 to 1,002, see, since your equity is $200, sometimes you think, oh, if I have more money, if you are not disciplined with small, Lord say, if who cannot trust you with unrighteous mammon, who will commit to you true riches? So that's the same thing. Yes, there's an advantage where if you have pool of money, but before you set up pool of money, develop yourself very well first. So when you make your account has grown to $1,200, there's nothing bad you removing $700 back to your internal wallet there. So don't let everything be in the trading platform. The moment the 1,2 is there, you will know where you bring it back to 200 or 500. Because why? You see that there's money. You'll be taking unnecessary risks that are not supposed to be taken, you take it. And the market will collect it until you reduce it to $350. Say, I was in 1,2. How come I return back to 350? It's because you refuse to discipline yourself over the market. The more money you see, the more the more you become open to risk without measure. You'll just be jumping in to different risk. So when you used to be taking one trade before, you just go and take like 2 trade, 3 trade, 4 trade, and all of that. So this is not peculiar to forex trading, please. Crypto is the same thing. Everything is it. It's trading. So it's not peculiar to just this thing. All right. So I've just shown you, those of you trade future trading. When you come to your coin market cap, you don't need anybody to give you signal. No, it's not necessary. Come to your coin market cap, go to 24 hours, click. Now it's very simple. When you go to 24 hours, like this coin has problems, so understand that. Now, if you come to 24 hours and you click, it will show you the last 24 hours, the best performing, the last 24 hours, the worst performing. So if you take the worst performing, you should be looking at when will it bounce back. That's the thing. So you take it to your trading view and check. Okay. So this is AVE. So how bad is it? What is the structure? Of course, it's going to be bad because that was a total crash. So let's take it out. AVE. And then let's look at it here. So that was a very bad one. But it's already at the bottom. That's what it means. So is it going to gather any momentum anytime soon? Maybe no, maybe yes. So, but you are waiting for it. So it's easy for you to say, okay, this market that had gone up and crashed down now, if possibility is still there for it to bounce. And that means you are looking for a buy potentially on that type of instrument. So you can always just go back to check, with that. So now some that that, okay, they really do not have problem. Let's see Monad. Okay, so let me take Monad, Mon, MON. So instead of giving yourself unnecessary stress, just plan yourself. And Monad, where are you now? I need to see. Okay. Okay, so Monad is still, so you can see now about how many rejection? 1, 2, 3, 4. Rejected again and again. So you can see that Monad is still selling and it's still going to sell. So that means you're looking at this point. So if it's there, like this time frame, 1 hour time frame, or 4 hour time frame, probably you want to go to like 15 minutes to see when the structure will change, right? So by this time, you will have found this. Now, this time around, look at it. Can we have a pullback to this level? Maybe yes. Until you have that. So you already checked that, okay, this market is still going to continue. So major point of target you are looking at should be here. So that means about 0.02 something, and it's 0.09 something here. So if I look at it to how many percent is this? Is it worth me checking to wait back for later? 13% is not a bad deal. But I always love maybe when the market is at a reasonable point and all of that. So that's how you just check. And then you want to look at which one to go and review and all of that. So 24 hours, 7 days, like ZEC. Okay, so let's look at ZEC. ZEC have been doing well, but I think I have a sell position on ZEC since, look at it, ZEC. Quickly, I'm almost wrapping up, guys. ZEC. Good. So you can see that you have to be patient too with ZEC. Probably, in fact, if you see what this guy did me imagine, I was on this trade since not this week, it was previous week. He was just doing the nonsense, not my business. Now, that's one of the things I always tell people. When you find a trade, you are putting your sell, your stop loss, your take profit. Because my take profit is seated here. Now, it was doing up and down. I do not have all the time to be following up and down. So you just allow it to be. Now, but when it has distant to an extent, if you want to take partial profit, it's not bad. And if you want to adjust your stop loss, it's not bad. But when the market must have moved to a reasonable level and you are seeing reasonable money, the best thing to first do is to take a partial profit. Very, very important. So because if you do not, then when you trade stop loss, when the market start moving back massively, you'll be afraid and you close, or you even wait for the market to hit your stop loss. So it doesn't make it. All right. So the same thing on Solana. So you can see Solana too is battling at this support. If it's unable to make it at this support, that means selling down here. So, but see the sales since last week. We'll have been in so much money. That's as simple as possible. All right, guys. So I think I've done the needful tonight. And so you're looking at Euro USD first. We say some sell before. We want to have a buy. So gold, we want to have sell continuation. So let me take off this. Remember, I said looking at it as the major demand zone or another block. So that's the crazy thing about gold. You can get there now and then bounce from there. So, but you are all there. As you get there, you go to lower time frame, 5 minutes, 3 minutes, even 1 minute, and you find the next setup on gold. You take it without looking back. Okay, so ladies and gentlemen, trading is simple, but it's not easy. Now you have to say, oh, trading is simple, but it's not easy. If it's simple, why is it not easy? Now, for the fact that it's simple, does not mean you will win because you yourself, you're not simple. We are not simple. That's the challenge. Like, okay, there was a market I saw today, and when somebody was selling this market on synthetic, let me just show you guys. Let me just show you. Where are you? I think it's was it 99? Was it gain 9? Aha, look at it. Let me show you the style I used there. Look at it very quickly. So, and I'll wrap up from there. You see all this my line? Please, if you can see my screen, just type 111. See all this my line? I will show you what really happened. What happened that I have all this line, plenty of this line. All right. Can you all guys see this my line? So if you can see this my line, just type 333 quickly. Type 333 if you can see that my line quickly. Type 333. All right, thank you. You can see my line. Thank you very much. Now, okay, thank you very much. Now look at this market. This is gain 99. Okay, so this gain 99. So I go to what daily time frame. Okay, thank you very much. I go to daily time frame. This gain 99, and that's how I sold that down, and I expect to pull back. Okay, so I go to gain 99. Look at it. Now, if you are not smart enough, you just create a lot of issues, or you'll be waiting for some market so long. No. Now, when I got to gain 99, exactly what I did was this. So today, what I did was that's why you are seeing all this line. Let me show you very quickly. Maybe you add to your knowledge on that. Very simple. Now, on gain 99, on daily time frame, remember, I use daily time frame a lot. And so let me just take off everything and then take this one off this way. Take this one, take this one, take this one, and all of them. So this one, you'll see how it comes about. Okay. So let me just take all of them. Now, this market is supposed to be recovering because this is a swing point. Okay, this is a swing point. Here like this, it's a swing point. So that's a swing point, right? Now, so when I come for the day, I love to use my daily bias. Okay, so my daily bias is that what happened yesterday. So what happened yesterday was this. So let me use a horizontal ray so that I can be very fast. What happened was this. What was yesterday high? This was yesterday high. And what was yesterday low? This was yesterday low. So that means this candle was bullish yesterday. So now I do something. Where did it close? So it closed there. So, okay, if the market closes there, so when I came, the market have already swept the high. So I need a liquidity pool. That is, after sweeping high, it should deliver to the low because this liquidity have been taken high, so you probably do not see properly. So now, when I saw the sweep of this liquidity, very simple, right? So this is a sweep, even though this candle was bullish. Ordinarily, today's supposed to be bullish. So if you just look that, because just like candle continuation theory, like I said, here was bullish, but not decisive. It didn't close below this. So this is supposed to be candle range theory, right? CRT, supposed to be a powerful one. But look at what it did here. On daily time frame, what this market did here is what we call tweezer up. So equal on top, equal on the down. So this is a tweezer up. So that's a reversal pattern. So now, so here talking about this candle close above this. So you have see the following day should be bullish. And because this candle, this is a accumulation, manipulation, distribution, but it's a daily time frame. So because this candle closes this way, the following day, it's just a little, I need to see pullback, then for a buy, then the next one. So this candle was supposed to be buying too. So, but what happened? I marked the high, I marked the low. So this is the close of the market. So if the market has done this, the market hadn't swept this high, it make a lot of sense for me. So what I wanted is this. If the market is going to travel up, so this candle has to pull back inside it, maybe 25% pull back into it, and then change character in 5 minutes, then I'll be buying up. But it didn't do that. It swept the high. Okay, I said no problem. And the close, this candle you saw, I printed all these things, is the close. So I step down to 1 hour and show you something very quickly. Oh no, 4 hours first, to just show you something very quickly. When I go to 4 hours, this is what happened in 4 hours. So you see where I marked those things I marked? So this is the structure of 4 hours. This is a high, low, high, high, low, high, low. Now, so we have a structure here. That's a middle break of structure here. So if this is a break, so this is a swing high that bring about the break. So here is a low. So if here is a low, then here is a high, then structure was broken. So I'm going to take my fib level from this low to this high. That's a swing point. Okay? So if that's the case, see what happened now here. Very simple. So that means you're looking at here, this market to pull back into this region. I'm sure that's where you saw one powerful line there. So if this start this region, you want it to sweep back to. Now you begin looking to point of interest in that place. And there we have a very powerful fair value gap here. Then this line, this candle is still what? An order block. Can it come back to this point? No. So can top into this point and all of that. And then this is a liquidity because look at it here, high here, the market travel, pull back here, like another flow, and that creates a liquidity. And so this market can travel back, right? So why will it travel back? So let me take off all of this because if the market was going to come down to this point. So all this line you saw I marked, this line that was marked here, this one was a previous day low. Now the market for today took out the previous high of the previous day. So now where would I go to straight down? Remember this candle, right? Remember this candle? Even if I'm late, is this candle I'll use to sell, but I was not late. And so when I got to 5 minutes, this is exactly what happened. 5 minutes, 15 minutes, this is exactly what happened. Let me show you guys quickly. That was why the buy. So since this market, look at what happened. Very simple. So since this market had swept the high of yesterday, so now all of these are structure. So that means this is here. We have a high here and we have a low here. Look at it here. So we have a high here and we have a low here. Then this is a high. So that's a break of structure that swept this liquidity. So all you wanted is that the market was going to, and so where will it pull back to? So I took from this swing high to this swing low here, down here. So I'm expecting the market to return back to this area of focus. And then lovely enough. So in this area of focus, then the market tap into it. This small thing here is another block. And so which align like just like a confluence into the equilibrium. So here we have the equilibrium, and then this is another block. So tap into it and rejected. So that was a sell. Now stop loss, I'm going to take it above to give a buffer. Remember, it's against the spike, and that's where the trade was taken from. So now, because the trade was taken from here after this rejection or something, I think it was taken here, somewhere here. Now, look at it. The stop loss above here. Now, apart from 1:2 risk reward ratio, I already know where I'm taking profit from. Now, if we check this take profits, that was going to be about 1:3 risk reward. So I don't care wherever the market says travel to, but you see, I'm saying that the market was going to travel down to that other block of 15 minutes that I set down there. So, but look at it. This market had come down to this point and swept the previous day low, which is a liquidity area. So I haven't taken this, then the market probably want to travel back now. If it's going to travel back, you could look at it that, okay, if this market is going to travel back, this is a low, this is a high, this is a low. So now this is a breakout structure. So that means on 15-minute time frame, I'm actually not following the trade any longer. So that means I was going to take from here to see where are we going to be waiting for this market. So maybe on top of the previous day low, and then you have a bounce there. So if you get the bounce there, then that means you're going to be traveling back to the previous ones. So it's pole to pole. So it doesn't matter where the market has come to, but it has actually changed direction. So here is a low. So here is a structure. So you broke this structure. So we have a high here. We have a low here. So if you look at this low and this high, so if we're taking this one right here to this point, then what do you have here? So the market returned back to this. So that means as it is now on 5-minute time frame, if we take this, so the markets will be spiking any time from now, any moment from now, taking up from this to this point. So that means we're looking at this point. So that means this market should be spiking any moment from now, which is still returning back to this origin. And then once that happens, and I find a trade here, my target will still be here again. And that's all. So this is how the market sometimes is taken. You can see that market is highly mechanical and slow. You have to be very careful, logical. And then once you find a very powerful trade, I think it's not only that trade I actually saw today that I took. I can't remember. Did I took 12 or something? All right. So, but sometime, if you do not know what you're doing part time, okay, that was not this one. I think, Mhm. Was it two? I can't remember because I know one I took in the other way. Okay, so ladies and gentlemen, that's what it is tonight. Congratulations for everyone. And then, so we're moving higher and then building up our opportunity. Thank you very much, everyone. Do have a nice rest. And then, so the new week beginning, like I will still want everybody, you are trading, you are making money, you're not buying stock, you're not doing yourself well at all. You're not doing yourself well at all because stock are still booming because, as I said, market cycle of the stock market is every 10 years. So we're still in this boom, we're still in the spike. So maximize it as much as possible so that you can have what to fall back to as much. I've told you that somebody who used 100,000 to buy stock at the IPO of Presco, at the current price we checked, the person who used $100,000 at 100,000 naira to buy, at the current price, we say, okay, that means since 2005 to 2025 is 20 years. And so that means right now 20 years plus, so that is 21 years. And 100,000 naira had given, so the person worth is about how many million? So what we calculated was simple, was straightforward, was we calculated about how much? We calculated 200,000 because 100,000 was 0.5 kobo. That's 50 kobo. So 200,000 pieces multiplied by 1,980 naira per shares, right? So that gave us about 39.6 million naira. Yes. Huh? Am I correct? No, 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 no. Sorry. I'm killing the person. 396 million naira. So is it a bad investment? 21 years ago with $100,000, 100,000 naira, and you are seated on 369 million naira right now. That's crazy. That's super amazing. All right. So that's why we keep crying, shouting, and tell everybody to take advantage of all this opportunity. So for those of you joining us tomorrow in the morning, 8 a.m., congratulations, you come alive, and then let's trade together. Now, I've told you guys, if you are trading gold, it's always good you trade gold. If you are in Nigeria or you're in Europe and all of that, just wake up 1 a.m. to 3 a.m., super. Then 6 a.m., right, to 7:30 a.m., super. Even before London open, you already make some money. All right? So goodbye, everybody. See you tomorrow. And then those of you who are going to be participating in the fast track, either you attended the meeting yesterday or not. If you're on the group, you can join. It's going to be phenomenal. All right. You can join. All right. So just make sure you are registered on your WellTrade, verify, fund it, and then let us show you how to make money. All right. Good night, everybody, and have a nice rest. Bye.